The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I hope y'all had a great weekend. I'm your host right here. My name is Darrell Martin right here on TFNN. Want to remind you to go ahead and you are able to tune in and listen to us anywhere on your mobile phone at TFNN.mobile. Also, you can tune in and listen right there on TFNN.com on Tiger TV and see the traders charts. 9 hours of live trader commentary a day. Let's check out where the markets are at. We got the S&P flying on down. It's down 16 points. We got the Russell down 11.4 and the Nasdaq down 36 points on the day. Right now we got the Dow down 180. Copper is currently down about 0.5%. Gold is down, or sorry, up, not down, is up 29 points. So massive move right there. We got silver right now up 1.5%. Gold there, like I said, up almost 2.5%. We got natural gas is down 1.5%. Oil flying on up $1.84 right now. And now that's from the close. We've had a lot of movement on it, so we'll go in. We'll dive into that a little bit deeper here in a moment. Right now up 1.79% on the J4 contract there. We got corn is currently up $6 on the day, over a 1% move in corn. We got soybeans is, looks like soybeans is pretty flat. So it's down just a few points on the day. Euro dollar is currently down 64 Aussie dollars, down 5. Pound dollar is down 91. So moving pretty strong. Dollar franc is up 32. Dollar CAD is up 38. Dollar yen is down 35. We got Aussie yen down 22. Euro yen down $1.13. Pound yen down $1.43. And we have the euro pound is currently down just a mere 6 pips on the day. So that catches us up to just where the markets are at. We had a couple news trades, coming in, and we'll walk through those as well with you here in just a moment. And what I want to do also is just get up and look at a potential chart here where we might be able to, who knows, maybe we'll find a setup along the way, and we could look at maybe, gold. So we'll check out a gold contract over here, and so let's see. We'll refocus that one, and just looking at our ranges and where we're at on the expectations there. So we got gold, looks like it's moving down right now. And still got plenty of room to move down going into the end of the expiration hour here. And right now at 1:12 ending bar, being on 4-minute bars right there. So let's go over, let's check out the diagnostic scanner, and we'll see if there's maybe a good trade setup. Okay? And so, of course, things get a little crazy on the metals, especially going into the end of the day. Let me go ahead and let's throw our deviation levels on there and see where we're at on the deviations. All right. And so once that loads up, there we go. So we're right there at that 1.5 deviation. We're breaking down below it at the moment. And like I said, we have a potential short setup on the trade there. We could hop on in and take advantage of it. And we got the market sitting right now at, let's see, on the current high here, 1351.3. So I'm going to go in. I'm talking about the current 4-minute bar. Okay, not the high of the day. And just looking, scanning through as quickly as I can. That's what I like about the scanner. It makes it fast. And we had a weird little thing this morning where the strikes were the same on different expirations, which is like a once in every 3 to 6 months event. So we had to fix that, get that thing up and running. But we're solid now on it. And let's see here. Let's get rid of the weeklies. We don't need those. And, okay, so we got a few strikes that we could look at that could potentially work for us. 1353 is really our closest in the money strike. That's going to be pretty close right there. Let's see, we're at quoting right now. So what I do is I open up the tickets. I'll look at them. I'll see where they're quoting. It's sort of a helpful method is to get a few tickets ready. So I'll go up there and let's say I post, this ticket up. And then I'll even look at the lower ones. So I may check out like the one above, the one below. And so if I miss it, maybe it's just moving, flying down, I can hop in that trade. So look at this one right now. We haven't really hit the range yet on the high or the low. And we're right at a 1.5 deviation level. So just, some things to be aware of on that. But this is a trade you could go in, let's say you did, 10 contracts on it, whatever. The thing is, you got to be ready to hop out of this trade. It's only 1.5 points. That's about 15 ticks. Gives us a little bit of a move up there to 1353 that we could take advantage of. Just be aware we're right at a 1.5. So we're not going to be surprised to get some oscillation on this contract when doing this trade. So that would be the one I'd be looking at. But I'm sort of watching it right now because see how it's ticking up, and you got to be. It's tough right here at the end. So when you don't have a lot of time left till expiration. So I love the reversal contrarian trades. A lot of times a lot more when we're coming into the close because these metals can go berserk. So we're looking at what's called a premium collection trade possibility here. And looking at this trade, 1353 is going to be our strike. Okay, so if we go over here to 13 at 53 right there. And just to make sure that lines up so we can really see it. And by selling that, we'd be saying that it has to expire at or below 1353. Okay, so that would be the trade that you'd be doing if you were, going in and placing this one here. And so if I did sell it, the lowest I'd probably get up to buy back for would be about $4. As of, the expiration hour right there. All right, so now one of the things I always teach whenever you execute these trades over here on, like we're looking at the gold April 1353 short for approximately $20, is you need to get out if it hits your strike. If it goes up to 1353, you need to be out of that trade, okay? So be ready to hop out and, there's a lot of ways to do that, but you have to get out of the trade if it goes up because otherwise you're going to wipe out a massive loss. And you look at that max risk on the trade, and it looks huge. And you know what? It is huge. So you need to reduce that risk by not taking on the max loss. Max loss, if you buy a stock for $500, doesn't mean you have to write it down to zero. Okay, so you can get out of that trade before expiration. One of the important things to remember when you get in is, set a take profit, okay? One of the most important things you can do is set a take profit because if you don't, then you're sort of asking to, lose possibly in those last couple minutes. So, again, I highly recommend you do set a take profit and you also set a stop, get ready to get out of the trade if it decides to move against us, okay? Let's see here. And so I got that done. Trades in. Buybacks built in. Stop losses in. Okay. Okay, so right now it looks like it is moving down for us. It's bouncing off that deviation, so we're right at the 1.5 deviation level. Okay. Now, I want to have a little bit of an expectation here, too, because there is a certain point where if it's moving down, it's probably going to bounce back up, and that's if I hit the expected movement in the hour. Okay? So right now, we basically expect 2.4 points here in this hour, and we'll probably get most of it in the next 14 minutes, usually. Right now, we got 1.1. So we got about 1.3 points that we can move down from where we're at before I would expect the market to bounce back a little bit. Now, whether or not it's going to bounce all the way back up to here, probably not the biggest concern. But if I go and I go, right now we're at this level, and if I want to go in and maybe subtract, bring this down to Pretty much, because we've been going just about, basically you're talking about right to there, so about at this level is where I would expect sometime this hour that we'd bounce and reverse back up on gold. Okay, between now and 2 o'clock. And I've expected ranges based on every hour of every day of the week on every instrument that exists. So if you can chart it, I can I can give you the expectations. And so expectations are huge. It doesn't matter what you're trading, but especially if you're going in and you're trading, say, binaries, because a binary, you're talking about strike selection, you're talking about expiration time, and so you want to have a realistic idea of how far is it going to move, how much will it make when it moves, and can I take profit early? Am I holding? Am I doing premium collection? Am I doing an out-of-the-money trend trade? What am I doing? But you need to have expectations. It's not just to buy and sell. And, because there's an option. And the factor in option is you have time and you have strike that you also have to consider. So that's why I really like having these. Now, these help me also just on day trading, specifically. But I'll go in, I'll put them on a chart, and it lets me know when to, expect things to sort of be exhausted and start turning back around. I'll give you an example. Maybe over here on gold, I can give you one. And I'll put that up. Give me 1 second. But it gives me an idea sort of when to expect the market to maybe stop going in my favor, or my direction that it's been going. And let's see here. Oh, I got to add a little bit more time to my chart. And then I'll be able to load that up for you. And oh, that's actually what I got to do. Hold on 1 second here. All right. And we're just watching this. It's ticking down right now. Okay. So right over here, I sold it, and it's moving on down. We sold it up there for $20. Now it's down to $11.50, so that's good. Hopefully that trend will continue. And we got just a few minutes left on the trade. I just want to make sure that you're aware of what to do if we go into commercial break and you know how to manage the thing, okay? Let's see here. And there's actually another good point I can bring up while we're letting all this other data load up. It's right here. Remember I said sometimes I'll bring up the one above it and below it? This is the strike below, 1350. Okay? So if I was looking at this strike, this is the lowest really I would expect it to go during this hour. Now, it's the close, so who knows what's going to happen, but this is based on the close of every day of Monday for gold. So the best I would expect would maybe be to sell this thing earlier. We could have sold at 72.50. Maybe buy back at around 57. Okay? So there's a couple ways to use it whenever you see that expected move. But stay right there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, TAZ Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos TAZ Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to TAZ Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, welcome back here to Diagnostic Trading Hour. So you should have just had a nice little profit you put in your pocket if you followed along on that, selling that trade right there. And remember I said there was 2 trade possibilities. Okay, we're going into the close, expected move. We moved down, very clean trend right into the end of the close, lined up with everything. And, one possibility is you can do the in the money. So let's just say it doesn't move and it chops around and it doesn't do a whole lot. That can profit. Okay, so you could have sold that around 20, 21, 20, 19, bought it back at 4. You have another one over here. Now you could have sold this out of the money one, okay, for $72.50, and you could have bought it back at 57. Of course, now it's all the way down at 31. But it was within the expected move, and you could have done both. If you would have combined them, that'd be called a double binary. All right, let's look. We got a caller coming in right now. We got Lou from Nashville. How's it going?
Very good. How are you doing?
I'm doing great.
Okay, I was wondering if you could look at, I was thinking of buying a NG May put.
Okay, so NG and then going out for a May contract there?
Yeah, just waiting for a pop.
All right, let's check it out. Now, NG, what I will tell you on it is, obviously, as you know, it's very volatile, right? So that, are you talking about natural gas? Or are you talking about NG?
Right.
Okay, yeah. So that implied volatility is built in very heavily to the options, okay? So a lot of the pricing is built in there. Which put are you looking at? What strike are you looking at? I know you said you're looking at May.
May, probably a 42 foot.
All right, pulling it up right now. And let me back out and look at obviously a lot larger time frame here. There we go. Let's see, this ran right back down on the same volume right there. I'm trying to see if I can get this a little bit better target for you. It's like 448 is really the next big level it's going to go towards. 445. Let's see. You're going to get 4.2?
Yeah. I'm waiting for it to pop up to 4.8.
So 4.2. I'm pulling up all the strikes right now. I'm looking at the prices built in. So if you're looking at a May put, you're looking at about, 70 to 80 cents a contract?
Mm-hmm. I'm not sure what it costs a contract.
Well, that'd be for an option, but yeah. Yeah, for a contract, you're going to go in and you're going to be doing, what is it, it's 10,000 of them, right? So, it's like 1,600. That'd be 800. $848 is what it'd come out to. Okay, so yeah, you're looking about $848. My only caution on it would be, as far as the expectation of movement being all the way back down to 4.2. Not that obviously anything can happen. I'm just trying to give you the highest probability movement. And I'm going to look at, whenever I do that, I want to look at the, trying to see if we get a high volume that's going to push us down there. But, I mean, it's not a far off goal. Like, we should easily be able to hit that within a matter of probably within the next week or two, if it keeps declining. Got a major support resistance level. I'm sure that's where you're coming up with it right here, where you see all the traffic happening. And let's see, the last big move. I mean, we've hit all of those. Yeah, just trying to push it right down to this point. I don't see a problem with the trade. I mean, you got capped risk. Now, my big question is, what is your take profit plan?
I'm not sure of that either yet.
Okay, so definitely don't step in, or if you're not in, don't step in until you have it. Yep. It's a lot easier to, you will be more profitable more consistently in options if you take profits.
Right.
So, obviously you're going to take profits unless you want to be assigned, or have to deliver all the futures. But, I mean, you definitely want any kind of straddle, strangle, anything, you'll always be more profitable in the long run if you take profits over a consistent period of time. So you want to have that take profit, and it's a lot easier to target a level than it is to consider it will keep going, and have that take profit set up. So yeah, I would be at least looking to, once you're at that 100% mark, just because you are pushing into an area that's been so incredibly volatile lately, I would take profit at 1-to-1 on half my position as soon as I could.
Right. All right, that's obviously.
All right. Well, thank you.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So trade went on down. We took some nice profit right there on half our contract. The other half expired for 100% profit right there in the money. And as you see, just looking at it, this was our expected movement. And what happened? Went down to it and bounced right off of it again and again. And I either expect it to hit this low or this high. This is sort of like, think about this like a deviation level, what I talk about, like +1 deviation, -1 deviation, but for the hour. Or expect it to have a high to low of the deviation. So that's what this little blue arrow is over here. And it lets me know, hey, it's moved a deviation. I expect it to pull back. So like right there, when it moved up, and notice, they definitely changed. They're very, very sensitive to the market. And, that little arrow right there would have been like way down here on this and been very unrealistic, but it changed the sensitivity between 11 and 12. And so as it got close to that high, then you have a reversal trade. Same thing over here. Moves on up, reversal trade. And what I'm doing is I'm waiting until it's about 75% of the expected range, and then I fade it. Just a few ticks in the money of what I would expect the max expected range to be. So let's say if it was, 20 ticks, then if it's within 15 ticks, then what I'm doing is I'm selling like an in the money that's maybe like 7 or 8 ticks higher than where I'm at right now. So just a way to put it. Basically, I'm looking for the in the money contract and just trying to fade the expected range. So this flies down, this moves up, pop right there. You sell. It goes up a little bit further, and then it pulls right back down on that expected range. And just over and over and over again. So, very simple hourly strategy, but pretty cool, way to do things. And it gives you realistic expectations. So if you want to do an out of the money, then, like what I was showing earlier, is you could have went in and you could have sold at $13.50. Now, it would have been very important to take profit because look at the thing. It goes down, it hits it, then pop, right back up. And I didn't hold that to expiration. If you did hold that $13.50 to expiration, then, you may have lost on the trade. I don't know exactly where it settled. So it may have been good. I'm not quite sure, but why risk it? And but anyways, it flew down and it was down to like $20-something. So you could have had a massive profit if you really held. I usually buy back at 57 when I do out of the monies. But you could have held that right down there. And if you do both combined, if you do the in the money and the out of the money, that's what I was talking about a little bit earlier. That's called a double binary contract. So if I could go and I could sell this one for somewhere around, we did, around $20. So I bring $20 in. And this one I could sell it now. I want to say when we looked at it, it was about a $28 risk. So if this would have not moved, I would have lost $8 on the trade. But if it did move, I made my 20 and I could make another 20 or 30 on the trade. So basically I'm using my in the money to hedge my out of the money trade. That's a double binary. And it's very cool because, again, both of them are short. So I'm selling here and I'm selling here. And then I'm looking to, buy this one back. Now, we're actually, our entry, is right back here, right at the top of the show. We got in, like, pretty much right there. Because we were right at that 1.5 deviation level. We were starting to break down. I'm like, all right, let's hop in and let's go for it. So we went short there. And then we're looking to buy back. Pretty much when it comes back down to that expected range, that's where I drew that line, which also happened to be, a little bit higher than that. Because that was where we were looking to buy back at if the price hit there. And it did. It hit right onto it. But this would actually be the other binary that we sold. So I could change this one as maybe like our target price or something, make it green or whatever. But these are the two sold binaries. This was a target price for buying back. This is where we got in. And so if you sold both of them at the same time, basically got when it hit that level, then you have premium collection working for you. You also have very low risk trade working for you. And sometimes what will happen, and here's probably my favorite thing about this strategy, is every once in a while, you'll get hit, it'll pop up, and you'll have to get out of that binary because it's an in-the-money binary, and it has a massive risk, and you have to hop out when that moves. But more often than not, you're working, it's premium collection. If it moves in your favor, stays flat, even moves against you some, you can still be profitable. So 3 out of 4 scenarios work, whereas out of the money binaries, trend trading binaries, those, when you do those, it has to move in your direction. If it stays flat, moves against you, or moves in your favor a little bit, you lose. So only 1 out of 4 possible scenarios can you be profitable in them. So combining the two, a very good combo. But what's cool is, let's say you go up and you get stopped out on the in the money one, okay? Then this is an out of the money. This is only like $25, $28 risk, whatever. You don't have to have a stop loss. Your risk is not big. Your reward potential is actually huge. It's like $72. Well, it could go up. It could come back down. And you could still be profitable on the second one, lose on the first one, and at least cover your risk or most of your risk, or even potentially make a profit on the trade. So you're in the money, hedges your out of the money not moving. And you're out of the money, hedges your in the money in case it gets hit and comes back in your favor. So that's sort of the cool thing about combining the two different pieces together. The disadvantage to doing it is when it's flat and you're out of the money loses, you're in the money profits, you basically have nothing to show for it. When both profit, you get a nice big profit, and like I said, they hedge each other. So there's multiple good reasons to do it, but it is frustrating if you don't get a decent move to be able to take the profit out of the money. Now, to help you with that take profit, again, having expected movement ranges, like where is the market going to move to this hour and for this day of the week. Okay, not the ATR of the last like 20 hours. Okay, that ain't going to do you any good. But for this hour, for this day of the week, and then taking that profit right there and going, okay, I expect it to go here. When it does, I'm going to get out. And imagine if you would have done that, you would have held, let's say it was a 2 o'clock expiration, which means it'll expire, basically right here. mean, it was down there, but it came back up, and I don't really expect it to expire down there. Okay, it might, but I mean, just look at all these little green and, red boxes here. How many do you see where it's outside the box on the close? I mean, that one, we got like about a point outside of the box. Maybe not enough, like a few ticks. There's one. So we got 2 so far. Now, this one went outside of it, but came back in it. Okay, 3. All right, so since the market's open since Sunday, only 3 of those hours have been actually outside the box on the close. So there's a lot of ways you can use that information to your advantage for a variety of strategies. But the number one thing I'm telling you is that would mean take profit if it's, at the expected range on your out-of-the-money contract. It'll help you select a valid strike versus one that's, if you go in and go, well, man, that was $25. I could go in here and I could have sold the $13.46 for only a $5 risk. Yep, and you would have been donating $5 to somebody. So, it's a lottery ticket. Unless you have a reason to think it's going to move, like there's going to be a fundamental shock news announcement that's going to make it break out the expected range, not really what you want to be focusing on. It also helps you know when to, back off on trades. So not only taking profits, but, when to, slow things down a little bit. Like if I'm trading over here and I'm doing just, trend trading with gold futures, this is the chart setup that I'll be using. And I know it's probably a little hard to see the highlights on it, but basically what I'm doing, because the opacity is pretty low, at a certain point I start realizing I'm out of range. It's like right here, I wouldn't be looking to add in because I'm right at the top of this range. We come into a new hour, it's okay, now I have some room to move. We come over here, it's like, okay, well, how much room do I have, on this hour to actually be able to take off? So just knowing, like, what are my expectations and movement is very, very helpful when I'm trying to do these. And then, you can apply it to any market. You can apply it to indices. We can apply it to whatever. We can apply it to oil. Okay, so we can go over. I mean, oil's been had some nice moves today. Go ahead and throw up the oil contract. Actually, I think we should be on the 414. There we go. Move that over. And let's see here. What do we got for oil on April 14th? All right, so you can see again the ranges. Even with the massive moves we've had in oil today, okay, we've had some pretty strong big moves. In gold, we had big, strong moves. But I mean, we went all the way up to almost 2 deviations. If I back out for the day and let you see, I mean, this is the move on the day. There's settlement. Sunday opening up, and then just bam, flies up there, and we got a massive. We basically just ran right up even after settlement. The market just kept going. Ran right up, pulled on back down, but we had got up to 2 deviations. We're pulling back. But what's our realistic target goal? Okay, I think the market's going down. What prices should I be targeting? So if I got a short signal, like this would be a realistic profit target right down here. Okay, the expected movement. Now, it went a little beyond that. It's the little blue arrow. That's where it went outside that box right there. Went a little bit beyond that. But that's where I should be looking to take some profits. Okay? Not based on P&L, not based on not wanting to win or lose, but based on just the simplicity of how far does the market usually move, because the same players are in the market at the same time of the day on the specific days of the week. Now, I've studied every hour of every day on multiple instruments on different days of the week, and most instruments, surprisingly, don't have a massive difference in their hour of the day. Like 1 p.m. is the same Monday, Tuesday, Wednesday, Thursday, Friday on most instruments, give or take a few ticks. Some instruments, there is a definite variation change, but just to make sure, since they usually are the same, they usually only vary by a few ticks, but a few do vary. Then what I do is I break it down by every hour of every day of the week, and this gives me the most accurate possible expectation I can have. And there's a lot of ways to do it. So you go here, you could be targeting this short. If you wanted to take another short over here, you could target the short again, right there. So look at this, okay. You could also be looking when it does break when it hits right here and hits the expected range. You could buy. You Go right here. You could buy when it hits the expected range again. Right here, you could buy when it hits the expected range again. So you could reverse. So a lot of times I found that a good take profit signal or good, tighten your stop is often a good reversal. Okay, if it's so good that you should be tightening your stops up because there's a good chance it's going to pull back, then usually that's a really good time to also go in and do the opposite. So right here, even this one, right there, short, and this last bar is the close of the bar. It's 11 o'clock. So then it pulls right back to the range, even on that one. Right here, same thing. So just again and again and again. Just basically a boomerang, right? So going down and pulling right back, and just get that nice, curve. So we're going down here, and then pulling this thing all the way over to this point, and let's see. I know there's a good way to draw these arcs, but anyways, we'll go through. We can lay a lot of that stuff out, but you basically just the trade's pulling back and it's going right in it once it exceeds its expected range. You need that for taking profits. You need that for knowing when not to enter new trades in the trend direction, because that's when you're going to be selling at the low or buying at the high. Okay, that's going to save you a lot from making that mistake. So, and then the opposite is you can use that for counter trend trading. So it's a counter trend trade entry. It's a trailing stop or exiting on a trend trade. It's a filter for not entering another trend trade in that direction, at least during that hour, waiting for the new hour to come up. And as a good example, right here, you get in a trade, and it comes down to about this point, and you take profit. Okay? Well, man, it made all this other range. I could have made all this money. It kept going all the way down. Well, you can get back in on the next hour when you actually have some more expectation of range. Look what happens. It goes in, boom, it pops up. Then you see the market turn back around, right here. So the market started to turn back around. Or you just hop in at the beginning. Whatever. At least you got back at a little bit higher level. So you locked in some of this profit. If it does go up and you're wrong, you can survive. But you have some expected movement for it to actually be able to, go down further. And now you can also do this on 2-hour bars, 4-hour bars, 8-hour bars, whatever your liking is. You can trade hourly, so why wait 1 day or 1 week to make what you can make in 1 or 2 hours? And I sat down, I did several of these trades last night. Just did another one of them for you, right here on the radio show. It's very, very simple. These are different ways to use Nadex binaries. They're not all or nothing, hold to expiration, call it above or below it trades. They're not call put binaries, OTC binaries. It's a totally different contract. And so just trying to expose some people to the perception or maybe the misconception of what they actually are, and put all the different pieces together. But you can do a lot of different things with these options. You just want to make sure you understand them when you're using them. And the scanner helps out a lot because it pulls all the data in and makes it a lot easier to use. So if you haven't tried that out, definitely try that out over on TFNN. And let's see here. Let's check out what we got on our news. I want to do a quick news wrap up. We had a couple news trades to look at. So first one of those, I want to look over at the pound dollar. Okay. And we had the PMI has not been the greatest news trade lately, so I have sort of backed off of that one, but that doesn't mean it isn't going to be. I was looking at the stats over the last 12 months, and even though they were good over the last 2 years, the last 12 months just were not really measuring up to par. But we had the manufacturing PMI. It came in at expectations, not really the kind of number you like to see when you're doing a news trade. You want to see numbers be off. So not like right there, like I said, at expectations. And let's see here. So today, what we're looking for on this trade, let me change this up. I think I have it on default 24/7. Okay. I'm going to open up just a simple chart over here. Make it really simple. But we'll wrap up that news trade for you and let you know what news is coming out tomorrow when we get back right after this break, okay?
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. And so one of the things I was going through is just the news trading plan, the pieces that we got, doing a quick wrap-up of tonight, or last night, and this morning, I guess, really. And we had a couple potential things on there. We had the UK manufacturing PMI, not the highest probability out of all the trades we got. We're looking at, maybe 60 to 75% of the time. 50 to 58% of the time does that even break 50 pips. When it does, the average move is 60 to 75 pips. What kind of move do we get today on the 4:30 announcement? Again, at expectations, so not a big surprise that we didn't get a massive move here, but the move we got was right up there, 43 pips. Also notice, look how we moved right to our expected range. So perfectly moved up the expected range. Right on that, the news is sort of a letdown, being right at expectations. Got nothing there in the next couple hours to help you out. Pulled on back. At best, to break even if you're there managing it. But again, one of the lower probability ones, so not my favorite. Also, we had the ISM report as a possibility, and we have the interest rate, by the way, tonight. So on the ISM report, usually not one of the biggest movers on it, but let's see here. We can go and look at... by the way, on this trader here, I was one of the number one ways I was looking at the trade for tonight. I want to get you ready for that. I don't expect there to be any change in the Aussie dollar interest rate. I don't think anybody else does either. So if there is, of course, that'll shock everybody. It'll be a big move. But what you could do is you could do an iron condor. I've talked about that before, where you buy the lower spread and sell the upper spread. We did that last week on one of the shows. I went into detail and went over a couple shows. Had a caller come in. We went over a lot of details on it. But Aussie dollar interest rate, I'd be looking for, ideally to do an iron condor where my profit combined is about $50, and be looking at about a 1-to-1 risk reward stop loss on each side. So the Aussie would have to move up or down 100 pips on a no interest rate change there, and within 30 minutes of that no interest rate change coming out before it could even hurt you. So that's the trade I'm looking at tonight. The ISM report, that one I actually break down. It's sort of funny, all the way down to 1 minute bars, and again, not just the massive mover, but you can look at like euro dollar, pound dollar on this, and I'll show you if I can get the chart to come up fast enough before we wrap up. But let's see here if we get it in there. Okay, so report comes out like right here at 10. If we get a pullback on the report when it gets released, so I go into it, and we got a spike. Back. We did not get a pullback and breakout. Okay, so what I actually do is I usually do a spike trade on this. We'll see if we get it on euro dollar. And then for the last piece, what I'll look at you with is, because I know the timer's ticking down here. Market goes fast when we do a trade right there in the middle. For the last piece, what we have tomorrow, beyond the Aussie dollar, we have pound construction PMI. And on pound construction PMI, I want to see if there's a euro dollar move on that one. I wasn't up to trade it, but here we go. On the one from last night. And then, yeah, we didn't really get the spike on the euro dollar either. So it's not just a massive move on that one. But on the pound PMI, just to give you that last bit of information, we are looking at no trade. So basically, we're not looking at doing the trade. So there you go. All right, that makes it easy. All right, y'all have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.